Thanks so much for tuning into the trade setup. I'm Neeraj Shah. It doesn't look all that pretty. It doesn't look very ugly. That's the nature of the trade today, at least. Let's take stock of the global news flow. The Treasury yields, the biggest culprit, have climbed sharply. The 10-year yield hits the highest level since 2008. We'll get to the numbers in a moment. Tesla shares fell on sales miss as Musk promises epic year-end, but the numbers don't match up. Asia Pacific markets trade lower. China's offshore yuan has hit a record low overnight. And the Fed has said that economy grew modestly, but the recession worry has dimmed the outlook. In fact, we've had one of the richest men in the world, Jeff Bezos, talk about the same. He's in a tweet said that just looking at the number of outcomes possible, the probabilities that is in this economy tells you to batten down the hatches. He is talking about caution as being the key thing in the US economy currently, if not the world. Well, the US markets took stock of all of this and came off a little bit in trade. So two-day rally was halted, down about 0.85%, and the futures are trading in the red. The culprit and the 10-year yield will come up on your screen next. The US 10-year yield close to 4.15, if I'm not wrong, at a point of time. 4.14 currently, yes. So that is the key culprit. The dollar index strengthened a bit as well, 113. CBOE VIX moved up. Everything that could pull risk assets lower happened. The SGX Nifty should be indicating a start in the red. Indian markets are a lot more resilient than the other markets, and therefore the cracks may not be as strong or as pronounced, but we will start off lower, about a percent or thereabouts at 153 odd points. And frankly, that's the trade setup for today. The ghost of higher yields does come back to horn world markets, and there's no going away from there. In the short term, this is what will play on the minds of the market. And yet again, 17,500 is proving to be the tough hurdle to break. We did go up a bit yesterday, but we need to sustain above that for the markets to take that hurdle out decisively. For now, that stays as is. Nifty IT fell the most yesterday, not a dramatic correction, but fell the most yesterday and does remain vulnerable to any kind of collateral damage as a result of higher yields, lower valuation multiples, NASDAQ correcting. So all of that. Therefore, watch out for that pocket in particular. And why I use the term collateral damage is because if you look at it fundamentally, some of the numbers are turning out to be okay, as is the case in persistent today, and we'll come to that in a moment. But yeah, I mean, that's the long and short of, frankly, the trade setup today. Most things will correct today. It's not a dramatic fall. We may even pull back a little bit from the levels that we open up, but we'll have a start which is weak for sure. Though I do believe that at 4.15 yields, I mean, if Rhythm Desai and others are to be believed, and if this is peak pessimism of sorts, if the BOFA fund manager surveys we believe and this is peak pessimism of sorts, then it's a different thing. But let's wait and watch what happens there. Some security for today, we'll have a day in the red. The futures market, as I said, the US futures are also trading in the red. Securities in F&O banned for today include a BHEL, Delta Corp, Indiabulls Housing Finance, India Cements, and Z Entertainment. A bunch of results today. In fact, I've cut down the list, and yet it's a very long one. From amongst the four index, and I would use the term heavyweights for three of them: ITC, a heavyweight, and FMCG, Asian Paints, the big paints company, Bajaj Finance, the big NBFC, Axis Bank, not quite the heavyweight in the banking space, but certainly something that we look forward to. And then a clutch of others. Tata Consumer, by the way, I haven't mentioned that. That is out there giving out some sense of what's happening to FMCG. So think of it today: ITC, Asian Paints, Tata Consumer, United Breweries, Colgate, Palmolive, to an extent, Symphony. A lot of consumer-facing names come out with numbers and gives us a sense of what an average consumer across spaces is thinking of. Havells, by the way, wasn't the best, and I'll come to that. Maybe that's an indication of what the consumer is thinking as well. But it just will be interesting to see tomorrow, analyze what is it that all six of these have done and said. Maybe we'll do a small separate piece on that on trade setup tomorrow. Speaking of results that will react today and Havells, so the revenue number was okay, right? And therefore it goes to show that if they could clock in 14% with just one festival in the fray and a period of Shraddh as well out there, likely that the month of October will have good numbers for Havells, and therefore the revenue numbers will not be a problem. 14% growth, you would argue, is not terrible. Frankly, if you look at what Bloomberg estimates were, 3494, the revenue front, they've done well. The problem is on the EBITDA margin front. EBITDA margin at 8%. The estimates were 11.2%. The net profit down 38% at 187. Estimates were 262. Now, just two things to keep in mind here, viewers. If you watch Anil Rai Gupta's interview that he did with us last quarter, he had mentioned that this is something that is to be anticipated, that Q2 will see margin pressure, and Q3 onwards, this will abate. And Havells is a very tricky stock. It doesn't kind of behave linearly to its results. So be mindful if you're trading this one. It may, it may or may not have a gap down. I don't know that. Likely it should, but the revenue numbers are okay. The management has said that margin pressures are a thing of the past post Q2. If they manage to reiterate that today, and we'll have the management interview today at 10:30, then you know that that is what will play on the minds of the market. So therefore, be mindful of Havells. Just that the market mood is not all that sanguine, and therefore I'm inclined to believe that weak results could get punished today. Let's wait and watch. Navin Fluorine is the other one. Expensive specialty chemical stock. Not the best of numbers. Revenue is up 24%, but you expect Navin Fluorine to put up best foot forward on all parameters, on all counts every quarter, simply because the market gives it the premium. And EBITDA up 11% at 93 crores. The estimates were 112. EBITDA margin at 22%. The estimates were 25%, 24.9%. Net profit fell 9% at 57.81 crores. The Bloomberg estimate was 81.65 crores. So clearly some chinks in the armor for Navin Fluorine. It's an expensive stock. I would reckon that Navin Fluorine will get punished today. Hatsun Agro, revenues up 7%. EBITDA fell 18% at 176 crores. EBITDA margin at 10%. Net profit fell 48% at 42.48 crores versus 82 crores. So that is a bit of a worry as well for the market. So do watch out. There is a bit of a pain around Hatsun Agro's numbers as well, particularly the margin numbers. They don't look all that convincing. Other results include an OFSS, wherein the Q2 margins were at 41% versus 46%, PAT down 19%, or DCM Shriram. Revenues were up 32%, but the margins were down at 9% versus 13%. And AU Small Finance Bank, but I actually did okay. So, sorry, my mistake. I was bringing up all the weak numbers first before I get to strong numbers. Maybe AUSFB with the NI growth up 44% and GNPA down 6 bips is actually in the other list. But yeah, watch out for these numbers as well, OFSS and DCM. Now, since we talked about good numbers from AUSFB, let's bring up a couple of decent numbers. Persistent, I thought, was very decent. It's a beat on most counts, you would have to argue. Revenues were up 9.1% at 2050 crores. The estimates were 2025. Not a very big beat, but not weaker than estimates. EBIT margins 14.6%. The estimates were 13.8%. And PAT up 4% at 220 crores versus the Bloomberg estimates of 214. So actually, you would argue it's largely in line with the margins clocking in a beat. But not a bad set of numbers. It's an expensive stock, and which is why it needs to deliver every quarter. Now, Navin Fluorine hasn't, Persistent System has. They're two different sectors, but I'm just saying expensive stocks need to deliver. Persistent has. Maybe it doesn't get punished despite the NASDAQ move and despite the yields today, because IT fell in trade yesterday, as I told you. So watch out for Persistent. IFL Wealth, I thought did okay too. Revenues up 10%, 505. The estimates were 394. EBITDA 317. The estimates were 213. Net profit 174. The estimates were 175. EBITDA margin, they did really well, 63%. The Bloomberg estimates were 54%. So pretty strong show by IFL Wealth. So there are some queries on Rupee. I'll come to that in a moment. Some other stocks in news. Bharat Electronics. Okay, let's stick with this first. Sorry, then we'll get to BEL. Metro Brands, it acquired Cravitex Brands, which has an exclusive long-term license for Italian sportswear brand Fila, owns sportswear brand Proline, and therefore Metro Brands gets a variety into their stores, which is their own and exclusive to them, for about 200 crores. Interesting acquisition. Let's see if it reacts. Lupin, USFDA has issued a Form 483 with 17 observations. And NLC India, Kerala SEB has signed a PPA for 400 megawatts with the company. Maybe that's like good news for this one as well. What else? There is Bharat Electronics, as I said, Triton Electric Vehicle India, which is a part of the US-based Triton Electric Vehicle LLC, has issued a letter of intent to the company for procurement of 300 kV lithium-ion battery packs for the semi-truck project in India. This value of the project with Bharat Electronics is at an estimated value of 8,060 crores. They've signed an MOU with Triton Electric Vehicle to manufacture hydrogen fuel cells as well, with technology transfer from the latter. Just again, I think BEL CMD interview with us and outgoing CMD, but still that interview will give you a sense of how BEL is not trying to be a one-trick pony in defense, but broaden its horizons. This is one more sign, and they've gotten a large order, by the way. 8,000 crores is a large one. So interesting move there. Interesting announcement there, and BEL might well react in the session today. So do watch out for this one as well. Okay, have I missed anything? Let's just try and see if I have. On KPIT, by the way, Spark has downgraded to a sell. Goldman Sachs has maintained a buy, so it's an interesting one. Metals, sorry, I forgot. Alcoa was down about 8% post-market hours, so Hindalco might react. Yeah, I spoke about IBM and Tesla, so that's okay. What else? Let's just try and see if I have missed out on some. IndusInd Bank, I thought the numbers were good, sorry. Operating level, asset quality surprised positively as well, so that's not bad. Banks continue to do well. And Rallis, I thought the revenue growth numbers were okay, led by exports, so that's the other one that you want to watch out for. Is there something else? eMudra posted the highest quarterly revenue. Yeah, I've missed out quite a bit. So yeah, those are some names that you would watch out for. By the way, Metro Brands also, the numbers didn't look all that great. So while there's this announcement, the numbers were weak, and therefore that could get punished. Sagar Cement's sharp decline in EBITDA, and therefore that could get punished as well. Credit Suisse is an Indus outperform call on IndusInd Bank. JP Morgan is an overweight rating, so to watch out for IndusInd Bank as well. So yeah, banking might just hold fort yet again because IndusInd Bank and AU, SFP, both of them have done well. That's it on the trade setup today, viewers. Thanks so much for tuning in. Have a safe day. Sorry. I had to give a couple of things. Sorry, before I wrap up. Somebody wants a view on the rupee. I don't have a view on the rupee, but there are a couple of very eminent macro people that I speak to. They were short or they were long USD INR, which means they were short the rupee, long the INR. They can trade in the currency markets. One of them messaged me yesterday that the person, I won't say he or she, the person is closing the short INR trade and believes that the depreciation now is kind of par. I mean, it could go up to 85, it go down to 85 as well, but that's about it. Rhythm Desai in our Future Today Summit, and you should hear that interaction, by the way, mentions about how he believes as well that the dollar index trend vis-a-vis the rupee is kind of now hitting peak levels. I mean, this is kind of about the damage that could be done. So that's part one. A bunch of conversations lined up today, and we should bring that up. So you will hear our show, our annual ritual show, Sal Mubarak. Nilesh Shah of Envision Capital will be featuring on that show to talk about whether the new Samvat will indeed be a Mubarak one or no. You'll hear from Sandeep Kalra of Persistent Systems at 10:30. You'll hear from Anil Rai Gupta of Havells at 11. And you'll hear from Sachin Tikekar, President and Joint MD of KPIT at 11:30. So some very interesting conversations lined up. Two companies which have done really well, one which quite hasn't, and of course, an eminent market view on what the Samvat could hold in store. So lots of interesting conversations. You might want to tune in for some of those. Thanks so much for tuning into the trade setup today. Have a safe day ahead.